Hi there and welcome to this week's edition of Bulls vs Bears. Special edition this week, we're now on vodcast. I managed to find out where to plug a webcam in to it. So you can view our beautiful faces, or if you're not into horror shows, just stick with the podcast. It shouldn't make any difference really. But JT, Head of Compliance, obviously we've got to do a disclaimer first.
Disclaimer, yep.
But see, the added advantage is now that it comes up on the screen here behind.
There you go. Disclaimer.
So disclaimer over there. You probably can't read it, but general advice only, opinions and thoughts. Now you've seen us, I'm probably pretty sure you'll take it with the grain of salt anyway. Always get professional advice before making financial decisions. So JT, Osby's Golden Boy, how was you on the call this week? So
that was good. So I was on with Dawsey from Shaw and Partners. He's always got some good little insights there, and obviously he's got a big team of Shaws to help him out.
That's exactly. No, it's pretty easy when you've got a cast of thousands behind you.
Exactly. So he's just basically giving the house views, and we agreed on a few stocks.
Favourite?
Well, we did Duratec, Orica, Macquarie, Polynova we both liked, and we both liked Northern Star. And
there you go.
And being the self-proclaimed Osby's Gold Bug, I had to give that a buy. So
yeah, no, fair enough. Yeah, Polynova I like. They're pretty aggressive and they're expanding pretty fast, which means they're super bloody volatile. Superloop is another one. I think someone on Twitter was...
yes, that's the other one. That gave that one a double buy. Just with Polynova, so the fact that I found out last night their NovaSorb product has grown 35% for the last 5 years. CAGR, so quite well. And this is the first year they went to profitability. So
yeah, right.
Yeah, but it was like some sort of tax, some accounting. It wasn't true profitability from the analysts, but either way,
at least it's not pre-revenue as they say.
Exactly. But either way, I remember you told me about it. One of our
surgeon, and he said it's miles above. And then I wrote a nice article about it on Stockhead, I think, and Dave Williams actually sent me a nice email to the CEO, who's also CEO or exec chair of Bega Cheese, and gave thanks. And he's a bit of a lark. You see his Twitter feed, and he's like pretty funny guy, but obviously he has got a pretty good track record getting stuff off the ground. So and this week was just all about the Fed, wasn't it? So basically we just were bored out of our brains for the first 3 days of this week. I've never seen a market just sit around and do nothing, waiting for, and then pretty much do nothing until last night. So
what I found interesting about the reaction is obviously the market was actually pricing in 50. If you read all the reports of the future.
Well, it was equal chance of 25 and 50, but then after the fact, everyone was saying, "Oh no, it was always 50."
No, I read it well before on the Tuesday. It was on the AFR. They said the futures curve had priced in the 50, and it was like 70-30 as well. So
the CME Fed Watch was split.
Yeah. So either way, what I found interesting was that the cut came 50, bang, and the market sold off. But then,
initially it went up. Yeah, it was only a 1% range in the night.
But super volatile.
It was very volatile. Post figure, you could see it soaring back and forth like 1%, for a couple of times.
Yeah, exactly.
But it found a direction. Actually, it went down.
No, it went down. So that's the thing. So it actually sold off afterwards.
Yeah.
And then so it was actually options expiry here in Australia. So the funny thing about options expiry is that the index expires in the morning, and then the stocks expire in the afternoon. So index expired really, really low, and then all the stocks rallied in the afternoon. So they must have caught someone out in that. So
so it's more Asian session and European session buying, and then the US pretty much was where it was. So, but look, history is not necessarily on the side of the bulls. Where there's a 50 basis point cut, and we'll get to the stocks in a minute, but you'll have to bear with us on our first vodcast. The slides are a little bit all over the shop. So, there is two. I managed to find an argument for a bull case after a rate cut. So, if we avoid a recession, it's actually not that bad.
Okay.
and it will grind higher. It's not a knock it out of the park scenario. But if you go into the wild west of Twitter, basically anytime the Fed's gone 50 in the last 25, 30 years, the market's dropped by, on average, 41%.
On average?
On average.
Ooh.
It's only happened twice.
Okay.
But so context. But you can imagine, statistics are a wonderful thing where you can scare the crap out of people with, like, when you're being very cherry picking. And that's why I sort of, because I've been a perma bear, like I've been trying to find bull cases just so I don't get smashed in the market. And look, they were 2001, 2007. There is elements of 2001 that are similar. I think the Fed's, by doing 50, it's not in reaction to anything. So, whereas those two scenarios, it was in reaction to something. So they may have gone ahead of it, and there may be hopes for a soft landing. They did say that the terminal rate, or where the terminal rate sounds a bit morbid, but all it means is the where it's going to get to at the bottom will be higher than where they was expecting before.
Well, you can't get much higher than zero, isn't it?
No, I know, but they're going to go harder at the start, but with the view of
keeping it at 2.
It being at 2 instead of 1.5 at the low side. So I get what they're trying to do. I mean, not that they give a crap whether I approve or not, but but it may actually be the first smart 50 basis point cut they've ever done.
I guess the market was kind of expecting it as well, right? Like prior to that Fed announcement, I think it was like 51% chance of a 50 bip hike, right?
Yeah,
not hike, cut. So if they didn't,
but they had a number of Fed guys like putting it out there. They tried to warn the market without telling them that they were going to do it. Like Goolsbee was just about on breakfast radio pushing out 50 basis points cuts. He was like, I've never seen a bloke, I've never heard of him until like a month ago, and then he just was like, just constant getting it out there. So they quite often do that. They'll march someone out who's not, that's not important, and then do it. So look, in the short, it could work out, or it might not. So if you're looking for, I mean, JT particularly, and he's been absolutely right. This thing is just, it just feels like it's going to keep going.
No, I'm just saying you can't deny the price action. I think. Well,
no.
So basically, if we were all algo traders, like you'd be like, okay, market's going higher, buy. Market's going higher, buy. And that's what it looks like in terms of who's got control of the market at the moment.
Yeah.
And you can see it in the leaders, like basically, within all the sectors, all the leaders like the Goodman Groups, the Westfarmers, the JB Hi-Fis.
See, Commodities is 175.
Oh, really?
Right, yeah.
Go have a look at go have a look at WiseTech. It's insane.
What's WiseTech now?
135.
Wow.
Yeah, like it's.
Jeez.
And I mean,
the market's going higher, and it's the leaders.
Yeah.
So then, but in that case, because what's happened in, and we'll flick to another slide, which we've obviously got out of order here. This is the weekly. So you can see the Mag 7 have been up hard, right? So for this week, and but really what that does, it does amplify that concentration risk, because now they're just default rallying 3% a day. All of a sudden, 40% downside doesn't seem so out of reality, because they've probably rallied 15 in the last month or so. Like, I mean, Nvidia's rallying, moving 8% a day sometimes. So. And Nvidia was down early.
I'm just curious what market cap that is every day. It's got to be. It feels like $1 trillion every day. It's not a trillion.
It's a BHP and a half, or 2 BHPs a day. So the largest mining company in the world. So we'll go back to the stocks now. Kai, stocks this week. Tilix was one, and we obviously just spoke about WiseTech and Pro Medicus and Goodman's and those market darlings.
It's not just Telix actually. Like if you look at all the other pharmaceuticals, like Neuron was up today. CU6. CU6 is up another. What's it? 12% today.
Yeah.
It just keeps going, right? It reinforces what you were saying before, JT. Like just those market darlings. If we have
that was a micro cap. At the start of the year, it's probably about to make the ASX 200 or ASX. It's out of control. I mean, it's not out of control. Like, don't get me wrong. you come up with a cancer treatment, you're likely to do pretty well. But yeah, and the margin tends to be high when people have life-saving medicine. So
funny that.
But yeah, what else caught your eye? Look, I'm going to have to admit, we've been chatting structured products, Dave and I, for most of the week, getting people talking about gold and things. So it's been one of those weeks where I haven't had my eye very, very close on the market.
I had ALS on the call today. Yeah. So basically, it was a good contrast. So we've obviously seen price of commodities have all dropped. Iron ores just hit bottom. ALQ actually just showed that the business is slowing in Latin America and here in Asia or Asia Pacific, and it just shows that. So what they are, so it's mining services, but they actually do all the assays.
Which is all the testing.
Exactly. Whereas the other mining services they had on today was Orica, which is all of the blasting and production. So so obviously the production is not being hit, but exploration. Obviously, we've got lithium mines closing down, getting shuttered. Obviously, what gets cut first? The exploration.
Exploration.
So that's kind of like hopefully that's maybe a sign that we might have hit a low there, or we could see worse to come as well. But it's interesting that they got hit on their report yesterday.
Yeah, this was their beef. BHP's beef with the copper market is that copper price has been so in the dirt for so long. Well, excuse the pun. If that was a bad joke, I apologise for that. And it wasn't even intentional. But it takes 12 years to get a mine off the ground. But all of the biggest mines in the world that produce the most, 30% plus of the production, are basically all finishing in the next year. And there's strikes on. And there's all this, so people have got this, but once these stockpiles run out, no one's been exploring because the price has been so crap. And then no one plans anymore. The efficiency of supply chain has made people complacent. That's why we've seen nickel jumps and lithium jumps and all this sort of thing. So that's where it's one of those things where even BHP's they're not one to come out. They don't
really talk.
They don't talk their book.
They're quite conservative. They're steady as she goes. For them to actually come out with that.
Yeah, it was it was a bit. Well, look, I'm a copper bull. Shout out to Shane Davis again. It will go to $5 this year. Just might do it in one night. But yeah, so look, those commodity stocks, they seem to be finding a base at the moment, but it's always a noisy trade. So
so that was other good news. So if you follow the fund managers, Phil King from Regal Partners has put a bid in for platinum.
Oh right.
Yeah.
Well, they backdoor listed from VGI, right?
Yeah. So it just shows that when you're hot, and when you're not, you're not. Obviously, Phil King's done well at Regal, and for them to bid for platinum, it just shows off.
Well, didn't they have didn't they put in some ridiculous bid for Perpetual or something like?
No.
They put in a bid for someone that was way bigger than them earlier in the year. I can't even remember. But Regal's the prop king.
No, that was I think that was
queen,
someone was bidding. No, that was a betting company bidding for Tab.
Oh, that was right.
Yeah.
Sorry, no, I've got my mixed up there.
Yeah. So but this just shows in the fund manager's space. What's that story that you said? Basically, if someone gets divorced, they drop that fund manager. So this is
Paul Shooter Jones's rule. Yeah. No, if he's because he does fund the funds. If the key fund manager gets divorced, he cuts, and is very open about it apparently. As someone who's been through a divorce, smart move. Both the divorce and not dealing with the people who are getting divorced for a while. We shall move on.
Yeah.
But
so
US stocks we've largely sort of covered. Alternative assets, Dave. We've been chatting with people all week. We had a gold and we had paid for patience. Paid for patience we thought was going to be the winner, and then the market's gone up and everyone's going, what do I need you for?
The downside barrier wasn't that popular. It wasn't enough.
Anyone who was bearish was it's not big enough, and anyone who's bullish. But the gold one particularly,
came through.
It came through with the goods, so everyone's really bullish now, and We've got a bit of silver in there, but that's only.
Where's it heading, JT? Where's gold?
Yeah, no, it's the.
So
This is actually a statue of JT here.
that's a bit.
Oh, yeah, no, that's right.
No, so just plain TA, and I called it an Ausbiz. So my first target was 2,700 by I think November this year. So we're getting close to it. And I just read some research from Citi. Their price target is 3,000 in Q1 25.
Yeah, I reckon I think it's close enough to 3,000 now. It's going to want to get there. But
Yeah,
it's a pretty big move. But
I think the key with gold as well is that I put the chart on Ausbiz is that the actual rally's been extremely low volatile.
Mm-hmm.
So it just shows that anytime that someone wants to try and smack it, there's someone just there with a bid.
yeah,
There's a bid.
that'd be the central banks.
Yeah, exactly. And
Which we'll discuss with Trade of the Week later.
exactly. But when you got central banks there on your bid, that's pretty good.
They've got a pretty big budget, don't they?
Exactly.
Yeah, and they've got the added advantage is if they run out of budget, they just print more budget. So,
Yeah.
but alternative assets wise, so with the structured products, we've been a bit forced to go back and revisit, and we'll extend some barriers and
tweak around, get back into
tweak
the
around, and because at the moment there's not enough motivation. People are a little bit complacent, and so we'll have to just boys. This is the brains trust over here, but we're just mere sales guys. But we'll probably have something out to everyone in the next couple of weeks.
Yeah,
around,
we had a chat like let's boil it down to basic human nature. It's either fear or greed.
Yeah.
Sales. And at the moment, what modes the market in
Oh,
with
mate,
that
maximum
all-time
greed.
They want greed.
Yeah.
They want more.
They want more.
So look, if the market was to get sold off next week, we're probably going to come out with a fear strategy. Let's face it. We're and look, we have looked at long VIX strategies and insurance policy sort of style strategies. So yeah, just stay posted. We're mere babes in the woods with this stuff, and we're just and obviously it makes it hard when thank God we had the gold one on there as well. Personally, I think it was the silver part that really sold it. But mate, commodities.
But I will say that this again, the central banks aren't buying silver.
The Chinese are buying silver. They are.
The economy's going under at the moment. They've got no more money.
Well, that's the thing. They can't buy milk. They can't buy wine, but they can buy gold. So
Hey, they're
they're not buying iron ore, but they're buying gold.
Oh, mate, is it iron ore being left on docks? Commodities and FX, obviously we've covered mainly most of the movers in gold and silver. Iron ore dropped a bit and bounced a bit.
Bounced big.
But
Back in
China was
93.
shut for 2 days.
Yeah.
So, let's face it, if China's shut, you're only going to get window shoppers, really. Copper bounced, though.
Oh yeah, that move in copper is quite nice. Obviously, so commodities are driven. They're highly driven by liquidity. Fed cutting 50. Just generally, these commodities should go higher. Asset prices should go higher, and that's the general feeling. I think in terms of the commodities and FX, I think the one that stood out for me was Bitcoin. So Bitcoin's just been lagging for a long time, and all the gold.
It's like 20,000% in the last 3 years.
No, I'm just saying so.
Not enough.
But you talk to any crypto guys and they're like, oh, this halving sucks. And
Yeah, they need to get some freaking context, is what they need to do.
Well, they have.
So,
they have no patience. And that's why.
no,
That's why
they're doing an entire economic cycle in a day.
Exactly. But the key is
so
Bitcoin's just been trading sideways, and this is the first time it's back at 64. I think it hasn't been there for about a month. I think if it breaks 65, and usually what you'll find is that when it breaks it on a Saturday night, our time, Saturday, Sunday, that's usually a good sign that we should have a bit more in it. So keep an eye on it. I think that the Bitcoin bulls have been lagging the gold bulls for a while, so maybe it plays catch up. We'll see.
Yep. I wouldn't know. I'm still regretting selling my Bitcoin in 2014. But yeah, economy and politics, obviously we've covered the cut. But this obviously plays into, so Kamala Harris dropped by 10, so in the betting, dropped by 10 cents into $1.70 when they delivered the 50.
Wow. Okay.
So and we've got a lovely fella here, Rich Casali, who loves a good conspiracy theory. Shout out. He probably doesn't listen, but who knows?
He's got his tinfoil hat on.
He's got, mate, yeah, he's got his, yeah, exactly, those earbuds, though.
While he's fasting, isn't it?
Yeah, no. But stop picking on Rich. Anyway, so as I go to pick on Rich. But I tend to agree with him on this one. I reckon, because Trump said Jerome Powell is the first thing to go when he comes in as president. He said it 100 times. And the current Fed people, I think were all installed by the Democrats. They obviously think that Trump's a bit crazier than Kamala. Well, it's the choice. It's the better of two evils. It's like who's gonna be the least fiscally irresponsible, and I reckon it's political because they didn't need to cut 50. Like employment hasn't tipped over yet. The economic numbers aren't that bad.
No, the 50 makes no sense.
Makes no sense. So
markets at near record highs.
And real estate's at record highs.
Why we need 50? But hey.
Yeah, but so that's my theory, and it's not just because I thought it was 25. I think
so Biden's given.
I know, but the central banks have been increasingly politicised, and look at the RBA. We had an RBA chief ousted, like that.
Stick.
Bernie Fraser would have just, or McFarlane, he was a nasty looking dude. Like he was, he could shatter a window if he looked at it, sort of thing. He would have told the Australian politicians to pull their head in, get their budget in order, and to bloody, just to leave him alone. But we had it's increased, and then you had the likes of people basically in the press calling for the heads of the RBA and. Oh, we want a business forward. So what do you think businesses are going to do? Well, we'll be at zero interest rates for an eternity. And inflation will be at 50%. So, I think it's a bit of a shot back. If you want us to be involved in the politics, okay, here we'll be involved in the politics.
Yeah.
So, I think it needs to be independent. But personally, but yeah. There's not much in the way of news apart from that. EUV and Kai, you'll be the best person to explain this. China's got their first patent in for the lithography EUV thing, which effectively makes China possible for them to compete with the high-end chips. Yeah.
I think they're still a bit far behind in terms of.
But can you explain for everyone, because you had to explain it to me, right?
Yeah, so basically, the semiconductor chain in the world is pretty complicated, right? But it's dependent on a couple of crucial components. The main machine, the lithograph machine, the ultraviolet is produced in the Netherlands, so ASML. Basically, these things shine lasers onto a waffle and print out the semiconductors. That's what the machines do. Now, anything that's under 7 nanometers, basically very small, it's now banned to China. You can't have extreme ultraviolet lithographs exported to China. Right? So they have to create it indigenously, but with their technology, they can't technically create anything under 7 nanometers, but it looks like they're catching up because there's a lot of government spending. Basically, they're just like, okay, well, we're in a tech war. Let's fund budget into this and try to create our indigenous production facilities. So, well, this could be the start of, basically some,
and look what happened to electric vehicles,
solar panels,
everything. Basically, if the Chinese get their thing,
clothes.
And I'm gonna put my Casali tinfoil hat back on again. They were going to open up to the Saudis last week. And I said they've got a history of, coincidence? I think not.
I'll tell you what, I think there's a wrong impression of China in terms of where they are in their manufacturing capacity, right? Because in a lot
they're not precision manufacturers.
Their main manufacturing isn't about clothes and textile anymore, producing toys, right? It is actually high tech. If you go to Shenzhen, which is next to Hong Kong, this city in the 90s was basically a farmland.
Yeah, I went to Canton Fair in Shenzhen. Yeah, it's amazing.
It's crazy, right? So it's not about low tech anymore. China is focusing on high tech, right?
So as I put in the comments, have a look at how much high-speed rail they've actually put in.
Yeah.
And the key is, have a look at their safety record. It's on par with the Japanese.
Yeah, right.
So, like, for them to actually match that, it's amazing. So
It'll be quick.
Yeah, because they're like airline safety record is like the worst in the world. They're like,
Mind you,
they used to be responsible for something like 70% of the world's airplane crashes or something stupid. Look, I'm not saying don't fly Air China, but I'm not saying it either.
and you can't, in the same breath, you can't talk up Boeing either.
No.
let's not open up that can of worms.
Boeing, we love you. I don't want to be assassinated. Let's just move on from that, I reckon. So we are going to get to trade of the week, and as I said, excuses today. It's our first crack at a podcast, so we're a little bit off kilter. But we didn't really have much chance to do much this week in terms of trades, because we were just sitting here waiting for the Fed.
Yeah.
So and then and then we had expiry. It's not bad. So we're going to tip back to this smart entry note, which was the gold one.
Yep.
So the story behind this is obviously we own Newmont. It was traded the week before. We bagged a profit. We switched to Northern Star. For those that are eligible, we're banking that now, and then we're just going into the smart entry note to get back in 20% lower or get paid up 8.5%. Kind of coupling it up with, because that obviously, if gold does go to 3,000, like and fast, for instance, you're going to be spewing. So we've coupled it up with a smaller allocation of a leverage long.
Yep, the enhanced growth.
The enhanced growth. Let's make sure we get our terminology correct. And on a ratio of somewhere in the vicinity of sort of a minimum 4-to-1. So the discount entry note. So you don't feel like you're getting left behind, but you're not wasting a load of capital and taking any risk. So if it goes down, you've got a cap loss in the enhanced growth. But if it, but you're almost rejoicing either way. So it was a nice.
Exactly, and so if you think about it, like if gold doesn't go anywhere, and the income from the smart entry note pays for the leverage long, you haven't lost.
You haven't lost it, yeah.
But let's just say gold does decide to run, you're going to get the coupon and the leverage exposure. And usually when you can cap the downside and get the upside, it's usually a good trade. So.
And we made 40%. We made 25 in Newmont, and everyone told us we were crazy when we put Newmont on, and then it did nothing but rally. So but yeah, and then Northern Star. Oh, look, we've taken 12 out of divvy. And realistically, for our clients who don't want to do structured products, we've just held on to the Northern Star, which is completely fine. We're still very bullish gold, but it's just more about, along the way, it's a really
bit extra.
It's an intelligent way to have the same exposure, but without all the risk, basically. So
well, as I keep saying, so the great thing about and I've been trading options for a long time, and derivatives and these these structured products, structured investments, is that you can just nuance and finesse a lot of things. So rather than just having a binary outcome where it either goes up or down, you can cap the downside, have some upside, have
3D chess, eh?
Exactly.
I wouldn't.
You don't have to get too complicated, but anytime it's trading 101. If you can reduce the downside risk and get some
more
upside,
of the upside,
more of the upside, it's a good trade.
Yeah. So and look, and that's one of the things is that some of these things will, this had an added advantage that we already had gold and we'd done really well, so it was a super easy choice for all of our clients. If you're coming in here now, you'd probably just. You would adjust the ratio. It's still,
exactly. Well, so fresh funds, you would play it differently. Obviously, we've made some good money in gold, so it's a good logical step.
But and look, next week I think we've flashed back into greed mode on the CNN Fear and Greed, which doesn't surprise me at all. Next week I don't really know whether I'd feel stupid to say I'm bearish, because I think I'd just be. It's like we may as well swim against a rip, to be honest. So I'm gonna go bearish basically, but I know. Sorry, bullish. I mean, it's see my default. I couldn't
even say the word.
I couldn't even say the words. But yeah, I'm going to park my bear for probably a couple of weeks, I reckon. But this and it's very statistically very surprising. September weakness is not unfolding at the moment. So
yeah, because
nothing's going to happen to payrolls now.
Yeah,
Like, that's it. So
there's no CPI prints coming out at all.
That's everything's done.
Okay.
We got 2 weeks until there's any numbers that anyone's going to care about. So I think you've got to unless like a bank falls, like, nothing can turn this around. I don't think. This is like it's like trying to turn an oil tanker around. It's like unless it hits the payrolls rocks, I think it's going to keep going.
So I guess it's a case of is it going to go up fast or is it going to go up slow? Okay. For next week.
I haven't thought that far ahead. I'm still nursing my bear wounds. I've got to say that I'll be right one day. As I said, even a broken watch is right twice a day. But yeah, what are your thoughts, Dave? Are you bullish or bearish next week?
Basically, it's going at the moment pretty slow up, I would say.
Yeah,
Something.
it doesn't play well for my VIX position, but yeah, no, and actually that reminds me of. But yeah, what do you reckon?
Oh, I don't know. It's there's just a lot of ammo for the bulls, right? Like,
if you could remove the part of your brain that recognises economics.
Common sense and
you
sensibility.
would be so leveraged long right now. It's not funny.
Yeah.
But yeah, unfortunately, I can't. But
I'm gonna go with a strong bull.
Yeah.
Oh, strong bull.
Strong bull. It's coming out. You know, you've got the 50 basis point cut.
Raging bull.
Oh, raging bull.
I think the Bears could get flushed out pretty hard this week, and it actually could cause a spike. But anyway,
I have to double check that. Is it quad witching or triple witching tonight as well?
you're the options guy.
Yeah, but I haven't checked the calendar.
Mate, it's been exhausting waiting.
Yeah, but either way, I'm bullish. So technically, the market's broken out, and I think it continues.
Yeah, no worries. Well, feedback. Kramer of the week. I'm going to self-nominate again because I've been wrong about this seasonal weakness and things, and it sounds like really odd, but I feel like I should just start ignoring statistics. But I did have Kramer's had a few corkers this week, but nothing. He hasn't had any strong. I went and checked for that one, but the AFR had its usual Kramer where it actually wrote a fully negative iron ore article yesterday when it was up 3.5%. So there's been a few.
I'll have to see. Look, who's the editor there? Like they must be in like
swinging back and forth.
It's Bearish Iron Ore is very clickable this week. Just give it more.
And they're mining that. They're drilling that well until it's dry. But we've seen commodities come back up a bit, I suppose. But there was a lot of people wrong on rates. Really, like there's half the market gets a Kramer this week. And it'll be interesting to see. How next week washes out because they're left to its own devices. If the algos don't push it up, there's arguments for people start getting nervous about the fact that they did 50 because there is that Citi and JP Morgan were saying 50 is not a good sign.
Yeah.
JP Morgan's perma bears though.
Mm-hmm.
But yeah, it'd be interesting that. Because they do set the +3 rule, the 3 days until the big shops and the big funds get there. So it could be an interesting week next week. I'm going to be going out doing our agricultural research in northwestern New South Wales. So I'll be inspecting crops, wearing an akubra, and trying not to look like a city wanker. Basically, it'd be interesting to go out.
So I'm guessing your accent changes as your plane touches down or something.
Yeah, sure does. But I have been told in the pub a number of times to stop talking so fast. So, which it's for whatever reason. But but it will be interesting to see because I've spoken to Simon McDougall, who's a friend of ours on Twitter. We call about the ag stocks, and the ag stocks are coming into that off cycle.
Yeah.
Apparently, it's one of the best seasons I've ever seen out there. So he said Grain Corp's just not going to. There's every chance that they won't be able to process as much as that. So
we're still waiting for dips on those, but but
that's kind of probably pretty happy with because I like that trade because it's So this is a bonus trade of the week, by the way. I don't know how we got into this, but the grade corp just gets paid to process. They don't care what the grade is, but the grade will be much higher. So it'll be a good result for the farmers this time around if it's a high grade, because they've had, apparently, and I'm only passing this on, they've had patchy rain, like rain when they've needed it, not a big downfall, which then causes disease and things. So, and their margins would probably be better because they wouldn't have to spray and all that sort of stuff. So, yeah, it'll be an interesting little research episode out there, and see a couple of our wonderful clients. So, yeah, but until next week, people.
So thanks for watching the premiere
podcast
of NPC Markets with the new logo.
Oh yes, new logo.
So it's NPC Markets.
Yes, the C is no longer silent. We are under new management soon. So have a great weekend, everyone. I hope you stay safe in markets this week, and you're doing well. And we will all chat next week.
There you go.
See you next time.